So, what's a donor advised fund? In short, it's a tool you can use to direct more of your money towards organizations that help causes you care about by diverting it away from a revolving door of people that, at any given time, may include the last person on earth you'd want deciding what to do with it. Whether you donate $50 a year or $50,000, if you're not using a donor advised fund to give a boost to your favorite charities and your personal finances, this video is for you. Let's get started. So how does a donor advised fund work? It's easiest to think about a donor advised fund, which I'll refer to as a DAF for short, as another type of account that you can open at financial institutions like Fidelity, Vanguard, and Charles Schwab. Just like you may have a brokerage account or IRA at one of those companies, you can also open your own DAF account with the charitable arms of those organizations and fund it with assets like cash and investments. Now, what's unique about a DAF relative to your other types of financial accounts is your element of control over the account. Once you contribute money to a DAF, you lose control over using that money for anything other than charitable purposes, but you essentially keep control over deciding when and where you gift the money. Technically speaking, whenever you make a donation out of your DAF, you make a grant recommendation. But as long as you're gifting to a legitimate charity, you essentially decide when and where the money gets gifted. For example, you could contribute, say, $1,000 into your DAF today and wake up one day 5 years from now and decide, I'd like to gift $100 of that account to my school, my church, my fill-in-the-blank favorite charity. All you'd have to do is log into your DAF account and click a few buttons to make it happen. You could not, however, wake up one day and decide, I'd like to use $100 from my DAF to gift to my daughter or fund my retirement account. If you understand that simple example of what you can and can't do with DAFs, congrats. You understand how they work. With that out of the way, let's focus on what really matters. How can you use a DAF to share more money with the people you want to help by diverting it away from the people you don't? Here's 3 ways to do that. Method 1. Harness tax-free growth. Once your money's in a DAF, you can invest it but avoid any taxes on the investment growth, similar to a retirement account. So, for example, if you know you want to give $100 every year to your alma mater, you can fund $1,000 to your DAF this year, invest it, and gift $100 out of the fund each year while your interest, dividends, capital gains, and tax savings accumulate additional funds for gifting well beyond 10 years. Method 2. Donate stocks instead of cash. The most successful stock investments in your brokerage account are likely worth a lot more now than what you originally paid for them. That means you'll get nailed with a capital gains tax if you sell them. And that tax rate can approach 50% for the highest earners. While most people opt to make donations in cash, if you contribute a successful stock investment into your DAF, you get to keep your cash to use for anything, charitable or otherwise, while ensuring the government doesn't collect any taxes on your capital gain. Said another way, by choosing to donate with a stock investment instead of cash, you get to kick the government out of your pie when you'd rather just split it with charity. And finally, method 3, protect against a taxable windfall. Let's say your income and charitable gifts are steadily rising year by year, but one year you receive an extra large payment from a bonus at your job or the sale of a business. The beauty of a DAF is that you receive your tax deduction up front when contributing assets, as opposed to the later dates when you decide where your donations get sent. Therefore, in a year that you receive a windfall of taxable income, you can pre-fund your DAF with multiple years of donations to reduce your taxable income immediately, and even move down a tax bracket, without accelerating the pace of charitable giving you were already comfortable with. And as if these 3 techniques for reducing taxes and expanding your charitable impact weren't attractive enough, DAFs also make your life as a donor easier. To learn how, stick around for my closing thoughts. Thankfully, donating smarter doesn't make donating harder. One of my favorite features of managing all your donations from a DAF is that when tax season comes around, you can download a single record of charitable activity from your financial institution, instead of corralling a bunch of donation receipts from individual charities. If you want to learn more about opening a DAF, I've linked the websites of 3 of the world's largest and most reputable DAF sponsors in the description below. And with that, good luck with your charitable work. If you're interested in learning more techniques for smart investing, tax planning, and everything personal finance, hit the subscribe button. This channel publishes that type of content weekly. So, until next time, it's been a pleasure as always, and thanks for watching.